Yo. Yo, what's up, Johnny Sevenfold? How are you, dude? Thought I'd jump on, do a bit of a stream. There's not a hell of a lot to discuss. However, I'll go back to Bitcoin here. Let me go to the daily chart. Let me just adjust the volume a little bit on the music. There we go. So we have the big old fat falling wedge on Bitcoin. And now the title of the video, Bitcoin reaches an important technical zone. That's to do with this falling wedge. So no matter how you cut it, like where you have your line, this is why I've got all these multicolored lines. They're just, picking out different pivot points. But right now you can see, yeah, we're on the doorstep of trying to get out of it. We're trying to get out of this falling wedge. We're trying to break this trend line here. Hasn't convincingly happened yet. Some people might say, oh yeah, no, we did get out and we're now back testing it. I guess, yeah, it depends where you draw the line. Like where do you cut that? I think the green one on top is not really representing like the actual the pivots properly, because it's only 1 point. It's probably more like this orange or yellow line, because you get a bit more activity. Yeah, all of them come from the all-time high, and then they sort of splay out as prices come down. So the red one's interesting because it incorporates this situation that we had, where we were meeting resistance coming down, and then it also caused a resistance over here on the 9th of April. But we're above that now, so you could argue that, yeah, the red line was the trend line that we should be looking at, and we've come out of it, and now we're sort of potentially back testing it to see if we can find support off it before going higher, before moving higher. I think today was like a Jerome Powell speaks. He was making statements about the tariffs and the fact that it could really cause inflation all over again and undo a lot of the hard work that America has, achieved to get inflation down. But we'll see. We'll see. GDP comes out later this month as well, so we get to see how Q1 behaved, or how Q1 went. So that'll be interesting. If it's anything above 0 is good, for it just means that the country produced profits or income or revenue, rather than if if you're negative on GDP, like you're going backwards, and that's a recession, essentially. So that's where we're at, really. It seems like we've obviously got a high in for now. Like our all-time high is still just up here. It's still local. It's only what, like $25,000 away, 26,000. So, you know, we're still in the range. We're still in this like sort of ballpark. It used to be a lot tighter. It used to be like this, which unfortunately we lost that range, and now we've had to, I guess you could say this is the new range here. So it isn't just one big box anymore. We've like stepped down a level, locally speaking. But yeah, the line in the sand, like, I think what the bulls need to do is prove market structure, like reclaiming structure to the upside on this time frame on the daily chart. Like, we need to crack above 90k, which is this level here. We need to get above that to basically prove that we've reclaimed the uptrend. Not only that, so breaking the structure, which is the range. Markets are just ranges. When you break through the range, that is a break of structure. So breaking structure back to the upside is what we need. And then not only that, but we need a second part to that, is forming a higher low. Like, because that is what an uptrend is. Like, it's okay to come up above 90, but if you're dumping back down and making a new low off these lows that we've been getting, new lows, right? If you make another new low, then you're breaking structure back to the downside again, and you're still in a downtrend overall. So we really need those two steps. We need to break this structure from over here, which is like about 88, 89,000. And then we need to catch it. We need to like come in higher, like for our low. We need to maintain progress to the upside. And that's the bull scenario. Like that's what the bulls want to see. That's what we want to see for the continuation of the bull market. What kind of Fibonacci situations do we have going on? Let me see if I can hide some of this, some of these lines. I might actually, let me highlight them all, and then I'll put them in a group so that I can hide them when need be, when necessary. That one, and then that one. Did I turn it off? There we go. No. So I'll lock that, and then I'll group this and just call this falling wedge. Not failing. Freudian slip. Falling wedge. There we go. Okay. So we'll hide that. I'm going to hide that little local support line there as well. Because I want to do a Fibonacci retracement and I want it to be visible. So all-time high, lowest low since that all-time high gives us these fibs to look at. So we've cracked through the 236 already. That's the first hurdle. The real challenge is getting through the 0.5 and the 0.618 fib levels. They're historically, like, they're the toughest. They act as really good support when you're falling, and they act as really tough resistance when you're trying to climb. Especially when you're trying to, like, get back on track with, like, you know, a trend. So just for, like, a bit of an example, let's go back and look at last year's, like, previous all-time high down to the lowest pullback, right? Look at the levels that it had to get through to get back up. Look at that golden pocket. At first it was the 0.5 fib level, which was causing resistance. And then we had a golden pocket resistance here. See how we reacted off both? We actually came back off both. And then once again, like, there was resistance here a little bit. It got beyond that, but for the most part, you know, it was same again. This level in, like, back last year was tough to breach. That was what's that, 65,000? We spent like a good 2.5 months below 65k there, but we finally breached it. Look, and then we got the 786 fib level check, which is over here. So that's great. Let me just expand this so it's like a bit more easier to see. There's the one-to-one retracement. So it's like we've reacted to every fib level on the climb here. Probably apart from the 236 and the 382. Those generally don't put up much of a fight. You can get through them pretty quickly, pretty easily. But yeah, these levels, the 0.5, the 618, the 786, and then the one-to-one retracement. Like, this is all the way back to the previous high. So yeah, look at that. I mean, this is a really good example of, like, all levels causing a reaction. So that the golden pocket caused a double, like 2 reactions here and here. And then we had a 786 reaction and then a one-to-one retracement reaction. So that's how I'm looking at it. That's how I sort of look at Fibonacci retracements. And it's the same when you're crashing. Hey, what's up, Kwai? When you're crashing, yeah, so when you've crashed and you're trying to recover, though, like, it's hurdles along the way back to the one-to-one retracement, back to get back to the high, essentially. So that's why we do have a Fibonacci layout that we can track back to all-time highs from the pullback. And like I said, like, the 236 doesn't generally put up too much of a fight. Like, it's fairly easy to get through that level. Even the 382, like, it wouldn't surprise me if we just blast through it and then go test the 0.5 fib level and then get a reaction, you know? But so that's recovering. What about crashing? What about falling? Falling's the opposite. It's like, let me delete that and that. Falling. So when you're trying to figure out where support's going to come in, you draw it from the bottom to the top. But when you're trying to figure out where resistance is, you draw it from the top to the bottom. So that's when you've figured out a low. And then the opposite is true. When you've figured out a high, you take it from low to the high. So low to high, look where the fib has, like, found initially off the 0.5 fib level, off this entire leg. And then that broke recently, and we've almost pushed down to the golden pocket again. But it wasn't quite a fib reaction. I don't feel like this level is a Fibonacci response. I feel like it's more of a market structure response, and that's this resistance here becoming support over here. It's the same level. It's very close to the golden pocket though, very close. So I think that is reason enough. I think that's good enough to see a bounce. If we're not getting the response out of the stock market yet, like if I go up to the high time frame on the stock market, we're not getting total recovery yet on the stock market. So crypto has to wait. Like, we're just going to grind. I feel like we're just going to grind for a while until the stock market turns back on. But we haven't seen that yet. We haven't really. It's still getting lower highs and lower lows, so it's still in a downtrend, the stock market, unfortunately. And I'm talking local. I'm talking locally. So this year, you know, from January to now, we are in a downtrend. There's no question. So it's bearish price action, medium term. Cycle wise, like if I zoom out to like the monthly, let me go 3 monthly. Obviously, you know, the United States stock market is still in a screaming uptrend in the big picture. There's no question about that. It's a roaring market. Southern Yankee. What's up, Randall? You're welcome, man. Pleasure. Why doesn't he have the Discord live stream anymore? Well, there's no group talking in my Discord. Yeah, I don't have that anymore. So maybe we can get it cracking again like that at some point in the future. So yeah, Dow Jones, Nasdaq, S&P, Russell. You can see these three. So Dow Jones, Nasdaq, and S&P. They're all very similar. Nasdaq's tech heavy. S&P 500's 500 of the biggest companies in America by market cap. Dow Jones is more of like a focused 30 companies. So you got 30, 100, 500, and then you've got the Russell 2000, which is 2,000 companies make up this index. So it's more of like a way more averaged index compared to these three. These three are like high performing stocks indexes, but that's what we got with the stocks. We need that. So one good thing about that you can see on this 3 monthly view, or even the monthly, is that you've got this really big wick. Thanks to that day that we had where we dipped, I mean, damage was done to the market. And then, you know, this is the buyback that we're seeing. So we've still got 13 days left of this month. But that's one hell of a candle. That's and a trend that we've been in this year. It's been very volatile. The volatility, I'm sure the VIX has gone up on, say, like the weekly, monthly. It's been hot. The market's been running hot. So back to crypto land. Yeah, crypto has, for the most part, felt the same pullback that the stock market has felt since January, right? It's just been nothing but lower highs, lower lows. So understandably, people are a little bit jaded and losing interest, and, you know, the Discords are quiet. You know, our communities, the ones that are still pinned and like still dialed into the market, we're still messaging in the text channels, that kind of thing. But yeah, you can really tell that it's just retail doesn't like this time of the market. Just like retail would have struggled a lot through here, like through all this misery of, like, you know, lower highs, lower lows over time, like a grind down. We're getting another grind down, you know. It's painful. So progress being made to the downside still. We haven't turned the market back on yet. But that falling wedge, if I turn it back on, I'll delete the Fibonacci retracement. That falling wedge is showing that, you know, we're on the interesting side of the wedge. We're at the top side. We're looking for that breakout. So right now, technically, it's kind of scary looking because it looks like a head and shoulders on the 4-hour chart. You know, it's very close to finishing, drawing out like a head and shoulders type shape. So it's like, okay, well, if we do a head and shoulders, are we to come back down and like, you know, go visit our last year's high again? I mean, it looks like it could totally do that. Like we could definitely come down and even test the bottom of the wedge one last time before then coming back out later and then continuing the market, you know what I mean? Not in a straight line, but like, yeah, doesn't always happen in a straight line, right? But just got to be open to the possibilities, you know? Anything can happen. Almost. The only thing that can't happen is we can't go back in time. We can't go backwards. Can't undo the chart. It is what it is. It gets printed. We have to deal with it. So, I guess, yeah, playing things locally, like just these candles, this cluster. We've had a really nice violent move up, getting above this high here. So from this perspective, on the hourly chart even, we've got an uptrend. Like we've had a double bottom, we broke structure to a new high, a higher low, a higher high, a higher low, a technical higher high, but it's just a swing fail, probably a double top, right? And then now we've got a double bottom low. So we're currently in a rectangle, locally speaking, right? It's like this. That's what we're in right now. And it's like, okay, do we break the top or do we lose the zone and like fall out the bottom? That's how I'm seeing it right now. Let me just make that line more visible. It's the opacity, there we go. Okay. So that's the box we're in, y'all. So we're on the cusp. We're like trying to break out, but it just hasn't quite happened yet. We're sort of still knocking on the door. We've kind of knocked on the door maybe 3 or 4 major times, like once here, once there, and like now once here. Like just keep repeatedly trying to break and bust through the highs, but it just hasn't happened yet. Just have to be patient. And that is local. That is what's happening in April, you know. But treat it as a range, you know. If you're looking for swings, more like local, just intra range plays, define the box, find the extreme boundaries, right? And then divide the box in half, like this. I'll make it dashed. And just buy on the low side of the box and sell it when it comes back up to the high side. You know? Stop loss outside the box, stop loss outside the box if you're going short, you know, at the highs. And that's how you trade a range, really. It's not much to it. Or you can turn a grid bot on. Set the grid up, like on Bitcoin, between 83k and like, you know, 86. 83 to 86k is like the kind of $3,000 range Bitcoin's in right now. That's pretty much it. There's nothing too much else happening with Bitcoin. We're just waiting for the higher highs to come in, if they will. Otherwise, it's like, if we just keep on status quo, like if we keep getting more of the same, then we're still just in a downtrend off the all-time high. I am still optimistic for the rest of this year. I think Bitcoin's kind of just buying time at the moment. It's waiting for the right moment. I don't think you're going to see Bitcoin, you know, crack down, to 50, 40, 30k from here. I don't really see that happening. We've just had one of the most savage days in the stock market, and all it did was send Bitcoin down to the previous high. Like, Bitcoin's being pretty resilient in crypto. Well, Bitcoin. A lot of crypto, you can't say the same, because it's like, like things like Ethereum have corrected so heavy. They're basically in a bear market. The altcoins are in a bear market. Like, they're not in a bull trend. They're not in a big macro bull trend. So it's just not the time for alts. It's still Bitcoin's story primarily. But yeah, that's pretty much all we got. All I've got to share, or all I wanted to cover. XRP is similar to Bitcoin. It's waiting. It's just waiting in the wings. But primarily, for the most part, it's in a downtrend, right? Falling wedge type situation. And waiting for more activity. Like, want to see it crack out of this cursed downtrend. But yeah. Anyway, alright, thank you so much, guys, for tuning in. I know there was only like about 14 or 15 people that showed up at best. So that kind of like underlines the mood of the market right now. It highlights the kind of phase we're in. We're in like the boring, people have lost faith, lost hope, lost interest. But the real ones are still around looking, and paying attention. All phases of the market are necessary, by the way. Learn to love them all. Like, the bear markets are just as, if not more important than the bull markets, to be honest. Like, you need an entry into a long. So how do you get an entry into a long? You need a dip. So if the market's dipping, then that's good. It means you can build into a long that you can take into the next, uptrend or bull phase or whatever you want to call it, the next rally. But yeah, it's all necessary. It needs to go down and it needs to go up. It needs to do both. And we're just waiting around. Anyway, thanks again. Have a good day. Have a good night wherever you are. And I'll see you on the next one.